Assalamualaikum warahmatullahi ta'ala wabarakatuh, and welcome back to the journey to learn MFRS 116 on property, plant and equipment. What we're going to do today is we're going to do a past exam question, March 2017, question 1d. The purpose of doing this question is actually to also illustrate the application of the initial cost, when you acquire a PPE but the payment is being deferred. So let's just recall what you have learned earlier. Before this, you are informed the initial cost equal purchase price plus directly attributable cost plus initial estimate at the present value, initial estimate of dismantling, removal, and restoration. Okay, now we are coming to the next part, which is we're still saying that initial cost, but now initial cost is equal cash price equivalent. The issue is, when does this so-called cash price equivalent arise? This is normally if payment of the PPE is deferred, meaning that you buy now your machine, for example, and you don't pay immediately. Maybe you pay some deposits, some first payment in cash, but maybe there are 2 or 3 payments that you need to settle in the future. So if it's the case, this is where payment is being deferred. And if payment is being deferred, the initial cost will equal to the present value, meaning that if you are going to pay in somewhere in 1 year time, 1 million, for example, what is the value of that 1 million today, right? So that was the case of if you acquire a PPE and the payment is not immediately made, but it is settled in few installments, not settled immediately, and therefore let's look at how do we apply this. So for detail, you can check your textbook in terms of the concept of it, and you can also refer slide 20 for more explanation, slide 20 of our notes, and also you may also refer example 1.3 in the PowerPoint slides notes, which shows simple example. So what I'm going to do now, I'm going to do the past exam question March 2017. Okay. Let's read the question. This one, yeah. On 1st of July 2016. So 1st of July 2016 is actually your initial recognition date. You acquired a new plan costing 7 million. But you are informed that it was paid in 3 installments. So if this is the case, so this refers to the so-called deferred payment. And let's see how it is being deferred. So a table is produced here for you to refer to. So if you look at the table given, you will settle the first payment here on 1st of July. And this one you pay in cash. This one is cash. So the present value is of course the same. Because it is about the value today. And the second installment, this is the first, second, and this is the third. The third installment you will pay here. However, if you pay on 1st of July, the value would be 1.5. But if you were to discount back the value today, which is on 1st of July 2016, the value would be 1.35. Okay, this one. So this one is on credit, but this is the so-called present value. And the last one, which is your third installment, are also paid on credit. If you were to pay on 1st of July 2018, it is 1.5, but the value today is 1.2. So these are at present value, these two payments. So if you total up this two payment, yeah, you will see that it will bring back the figure to the total amount that you have in the present value. So if you total up, this, you get 2550, and this is what you paid in by installment, and the one here is paid by cash. So apart from that, you also have some other directly attributable costs. You have the shipment cost to deliver the asset, 200,000. So this will also be a capital expenditure. It will be included in the initial cost. To ensure the asset, the plant, will be able to operate in its intended manner, you incur testing costs. So this is also for you to put in the initial cost. Later you have some maintenance. Maintenance is just incurred to ensure it is working in its proper working condition. So this one will not be included in the initial cost, but it will be expense off. At the same time, you have another 150,000 that also not to be included in the initial cost. Why? Because that was incurred after it is already available already for its intended use, because technician come and that was the time span by the technician. Okay, so let's try and look at the calculation of initial cost first, because this question asks you to calculate the amount of the new plant. So when you have amount of the new plant, it refers to the initial cost. Okay. So we're trying to calculate our initial cost for the this is on 1st of July 16. The one that you paid in cash, yeah, your purchase price, the one that you paid in cash is this one. So we put here purchase price 4 million. Then you have this is through your first installment. Your second installment. Second installment you are going to take at the present value, 1.35 million. Next one is the third installment. And that one, if you look in the question, is given here, 1.2 million. You also incurred earlier the shipment cost. The shipment cost was 0.2 million, 200,000, given there in the question, the paragraph. Next one is the testing cost. Remember, testing cost is part of attributable costs to ensure that the asset is working properly. So this one is 0.1 million or 100,000. And then you are also informed that this testing also included this 38,000 that relates to the sample produce. So the testing that you have incurred, 0.2 million or 200,000, you need to deduct 0.038 because that one has to be excluded from the initial cost. If you have another one, which is the installation. Cost. Okay, sorry. This installation cost, 150,000, is part of the initial cost. Actually, I hope that you notice that maybe I wrongly mentioned just now. But initially, this is part of the cost. And that was 0.15 million. So if you total up this, you'll be able to get the total. Take your calculator and try to calculate. You'll be able to get 9.6 9.962 million. So these are your initial costs that you will capitalize. And this capitalized cost is what you call initial costs. Next, so we are done with the part on initial costs, and that was for 4 marks. 4 marks. You are also asked to prepare the journal entry. Journal entry, just what you need to do is you need to see how much is paid in cash, how much is paid via credit, or not yet paid yet. For the journal entries, since what you are purchasing is a plan, debit plan, and the amount was just now we calculated 6962 million. So you are going to credit cash or bank for the one that were paid in cash. Remember the first installment together with those attributable costs. So to get this, you need to first find out what are the one that you pay to the one that you have to pay on credit. So these are the deferred payment. For the deferred payment at present value we earlier calculated, that will be 2550, which is the 1350 plus 1.2 million in the table just now. So the total that you will incur in cash will be the difference between this, and it will be 4412. Okay, that's the journal entry. I hope you can follow me. And now we move on to the next part, which is to discuss accounting treatment. When you are going to discuss the accounting treatment, you are going to write that sentences which relate to the requirement of MFRS 116 PPE relating to disposal. So let's just look at some information on disposal. You are informed that on 1st of August 2016, they dispose. So the word dispose can also be replaced with the word derecognized, which is actually showing this is a derecognition of plan. And the plan was purchased on 1st of May. And the initial cost of the plan when it was purchased was 5.5, but the plan was disposed for 3.5. So this one is the disposal proceed. You are informed that it is the policy of Bengal to depreciate plans every year meaning that per annum 10% on yearly basis. The year ends finish every 31st of December. So what does this yearly basis imply? So if you can recall, there are no depreciation charge related to the disposed asset, and dispose or derecognize PPE in the year of disposal. However, there will be full year depreciation charge in the year of acquisition. So let's say if you acquire the asset here on 1st of May 2012 here, in the year 2012, which ends on 31st of December, you are going to calculate depreciation for the whole year, even though it was on 1st of May that you acquired and it was just a few months before a year. Okay. However, in the year of disposal, for the asset that you purchase and now you decide to dispose, there will be no depreciation. That is for yearly basis. So we're going to apply that there in the question. Before we do that, you're asked to discuss the accounting treatment. Accounting treatment for the that is on the disposal on 1st of August. 1st of August. Right. Before you can discuss this, bear in mind that the financial year ends on 31st of December 16 in that year. So you need to take into consideration what happened in that year, as well as not only the costs that are related to the asset disposed, but also the depreciation. So what we can do now is that we can straight away do some workings to help you with the question. Okay, there's a space here, so I'll be using it. Okay, so let's look at the plan that you have. Remember, we are doing the Derecognition of plan. Okay, I'll try to make it faster and let us just check the answer straight away. But as you check the answer, I will also show some workings next to the answer. Okay, let's go to question March 2017. Okay, this one you can check the initial cost that we calculated. It is also together with the journal entry. Now let's look at the accounting treatment. before we look at the accounting treatment, it's best that you can also put the journal entry. Okay. I'm going to use a new sheet to show that, because the space provided next to the answer is very squeezy, so might have a problem to write. So I'm using my S notes. So let's look at this. How do we work it out? So remember, this is Derecognition of all PPE, and our all PPE is plant. You are asked to discuss the accounting treatment. Actually, by doing the workings, it can help you with the accounting treatment first. So let's look at the info. You are informed that the cost on the date of initial recognition, 1st of January to 1st of January, is it? No. It is on 1st of May. 1st of May 2012. 1st of May 2012. The cost was, if you look in the second paragraph, second last paragraph, you can see 5.5 million, right? So that is the cost. Our focus is trying to discuss the accounting treatment for derecognition. To discuss that, what you need to do is you need to discuss how much is the proceed, what are the profit or loss on the derecognition, how much is the cost that are being disposed, and also how much is the accumulated depreciation relating to the disposed assets. So at the same time, what is the depreciation charge during the year? We start off with this. So let's look at what happened before the date of disposal. What are the depreciation? So we can calculate the accumulated depreciation from the day you purchase up till the day you dispose. So remember, the year that you dispose will not be charged with depreciation for the derecognized asset, because you use straight line basis. Remember, I just informed you earlier. So therefore, you will provide depreciation in 2012, 2013, 2014, and 2015, meaning that 1st of January until 1st of May, until 31st, the year end was 31st of December, so until 31st of December 15. Why? No depreciation in the year of disposal. So if you do this, you take the cost, 5.5 million. You use yearly basis. So if you look from 2012 up till the 31st of December 2015, it is actually 4 years. Yeah. Why? Because at the end of 2012, 2013, 2014, 2015. So divided by time 10% divided times 10 times 4 years. Next. So if you do this, you will have your accumulated depreciation to be 2.2 million. So if you deduct this gives you the carrying amount. Carrying amount on the date of disposal. On the date of disposal. And this is carrying amount on 1st of August 16. Remember in 2016 there are no depreciation for the asset that are being derecognized. So this one is 3.5 million. You will compare with the disposal proceed. The proceed is given in the last part of the sentence in the second last paragraph. $3.3, 3.5 here. So 0.3 million is the gain on disposal. So what you need to discuss is to discuss this calculation. So in terms of journal entry, I'm just sharing this with you. This is not required in case the question asks you to do journal. So if you were to do the journal entry, the amount that you receive is 3.5 million. The accumulated depreciation that you need to eliminate is 2.2 during derecognition. The gain on disposal credited to the SOPL was 0.3. And the cost of the O component derecognized cost, yeah. So the asset is plan, right? All. The cost was 5.5 million. So 5.5 million. That one if you are asked to do the journal entry. But you are not asked to do the journal entry. The gain was not 0.3. I made a mistake here. So it is actually 0.2. And it is also here 0. So this one will have to be discussed. So we need to discuss what happened here, here, 3, and number 4. Right. Journal entry wise, number 3, number 4. Sorry, accumulated depreciation is number 2. This is number 3, and this is number 4. So you need to mention the requirement. So to do this, let's look at the final exam answer. Just bear with me. This is not the one. I got it wrong. Where is it? Okay. Okay. So what you need to mention is to mention number 1, what are the costs to be derecognized. Remember, our cost of the plan was 5.5 million. And then the second point is that no depreciation was provided in the year of disposal. Why? Because the policy is yearly basis. Next one is what to do with the accumulated depreciation. What to do. So it should be eliminated. The carrying value of the plant disposed was 3.3. This is optional. If you want to mention, you can do so. But normally we'll talk about number 1, depreciation, number 2, then number 3 we talk about the proceed and the loss. So the proceed, this one. The proceed, the proceed. 3.5 is actually being debited to the bank, and the gain on disposal are being transferred as part of other income. Okay, that was for that question. Right. Question. And the discussion, you can refer to the workings to discuss. So you can also put side by side. Perhaps you're working on the left side and your explanation of accounting treatment on the right side. Okay, I'm done with the discussion of accounting treatment for the disposal of plants on 1st of August. We will continue that part E later. So this is part 1, which is discussion on what? On deferred payment and derecognition. We will continue with part E, which will be on replacement in our next video. With that, I thank you, and I hope that you have understood the concept of deferred payment and derecognition, either journal-wise as well as explanation in the accounting treatment. So I will go on doing the second part later, and I will post the video. Okay. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Be safe, stay at home, study at home.